Hey everybody, it's Jason from MAPsignals. It's that time again, the best ETFs for April. Listen, markets are topsy-turvy. There's a lot of rotation and things are slipping around. We got some new areas rising to the top. Strength of sectors like energy and materials and real estate. We're going to go into those and more. And let's just get right to it. So first things first, we want to check in with the overall market and see where the money flows are going. As you know, it has been very whippy. There's a lot of rotations going in and out. This is our big money index. It rose substantially, then fall, then rose, then fall. Now we got a big rip. And markets have been rallying recently. Now, it's always good to look at where the money flows are going. And what we can see is in the sector charts, if I just go over here to energy, I mean, you can see for the past even 6 months, a lot of money flows in. Those blues are buy signals. So we're seeing tons of buying in energy. And something really cool that just came up on our screens, out of the blue, we saw a big spike in real estate buying. So you're going to see stuff like that filter through to our ETF process. Now, remember, we look at all the ETFs. We score all the stocks that are contained within them, or as many as are possible, as we look at and score over 6,500 US listed traded stocks. So this way, when we collect signals on buying and selling on ETFs and their individual stocks and score them, we can rank them top to bottom, which are strongest and which are weakest. So I'm about to show you what's shown up in our screens so far over the last month. So what you see on your screen right now is a list of all the ETFs that score within our system with US equities. Now there are tons like bonds and commodities and securities that we don't cover. These are all the ones with stocks in them. And what you are going to notice is look at the top 5, 6, 7, 8, all energy, oil and gas ETFs, oil and gas explorations. We got the Spider Energy Select Sector Fund, Vanguard Energy ETF Fund. You're noticing a lot. And look, they're strong technically, 84.5, 84.3. And they're all pretty strong fundamentally. So there's a lot of money flows going into this sector, as we can see. Just below it, we have materials, healthcare, insurance. This is all the strength at the top. Now, as we scroll down, you start to see the distribution changing a little bit. A lot of that mid-cap value and growth is towards the middle. And as we get to the bottom, some of the stuff that is getting really beat up are, banking ETFs, semiconductors are taking it on the chin with fears of a recession, home builders too. So this is a list we're going to work from, and I have handpicked 5 ETFs. So let's just go over them right now. Check it out. Our first ETF for April is the Vanguard Energy ETF, VDE. I just mentioned it a minute ago. Just have a look here. This mimics what we were seeing. Look at all this buying starting in October, and then January. It's just been a one-way train, just ripping higher. All that big money flowing in. This ETF scores really well. It's got an overall score of 74, a technical score of 83, which means kind of extended, and a fundamental score of 62. When you take into account all of the stocks that it scores, this is a very strong ETF. There are 105 stocks within the ETF that contains powerhouses such as COP. So let's just take a look at COP in our map view module, where we can rank and score the stocks. So ConocoPhillips, I'm sure you've heard of it. It has a strong technical score, a strong fundamental score too. You can see the big money flows in. It mimics that VDE chart. And let's go down here and look at some of the fundamentals. 1-year sales growth at 145%, 3-year sales growth 31%. The EPS growth hasn't been that strong, but obviously energy prices are crazy expensive. You feel it at the pump. We can imagine this thing is going to be trending higher in terms of its fundamentals, which is why you see the money pouring into it. Profit margin is 17.5%, and it's operating at 45% debt to equity. It has a cheap PE ratio of only 8.8 times earnings, and it's a $127 billion market cap company. This one is a solid component of VDE. So now that we looked at some energy in our ETF selection for this month, we're going to move on to SCHG. That is the Schwab US Large Cap Growth ETF. This one's a little interesting because the chart has been not so pretty, right? We've seen a fall from 83 all the way down to a trough of 65. But I want to expand out this chart, and you're even seeing some selling. But when you see selling on great fundamentals, that's typically a great thing. Let's go all the way back, and I mean, you can see how this thing is trending. And this large cap growth ETF has phenomenal stocks, Microsoft, Nvidia, all the ones you know. It also has a terrific grower in Tesla. That is a stock I'm sure we're all familiar with, the EV maker. Strong technicals here, very strong fundamentals. This company has started making money. And look at this chart. Huge money inflows into the fall. And then just again, recently, we're seeing some buying. If you want me to expand out this chart so you can see the power of those big green bars over time, check that out. Fundamentals, sales growth, 1 and 3 year, phenomenal. 2 year versus 1 year EPS growth and 3 year earnings growth are just off the charts. It is making a profit, and it's doing with very little debt. This company is over $1 trillion and continues to trend higher. Very interesting company. Number 3 on our list for April is another Schwab ETF, SCHH. This is the Schwab US REIT ETF. We've seen a lot of big money buying over the course of the last year, peaking in December, and we're starting to see lift. Now, you remember I just showed you in that chart, we saw a big spike of real estate stock buying just last week, and that's reflecting in this big lift here. So I would expect to see some big money buying signals very soon. Now, this is a REIT ETF, but you might be surprised to know that it holds a lot of stocks that you wouldn't ordinarily associate with a REIT. One of them is MasterCard. Yes, the credit card company, the digital payments company. They are ubiquitous. They are everywhere. They are a toll taker every time someone makes a payment. Check out the chart. Recently, kind of choppy. It's difficult to see opportunity there, but when you explode it out over a long time period, I mean, this thing is an absolute monster. Let's take a look. Is it an outlier? Yes, it has been all the way since 2007 at a price of $17. And right now it is trading where? Around 363. This thing has phenomenal fundamentals, 1 and 3 year sales growth, a huge profit margin. It does have a chunky amount of debt. I don't love that, but I know this company forever. It is a powerhouse. Loving MasterCard. Where do you put your money when markets are uncertain and there's recession fears and inflation fears and interest rate speculation? Well, you buy great dividend stocks, right? And this next ETF is HDV, the iShares Core High Dividend ETF. Check it out. The money flows have been flowing right in. It looks eerily similar to energy, but these are not just energy stocks. These are high dividend stocks. And one such stock that's being held in that is not an energy stock. It's Johnson & Johnson. You know, it's been around for 130 years. We know what they do. They make products that fill your shelves and bathroom cabinets all day long. And this thing has been a big money magnet recently, as bucking the trend of the overall market, lifting higher. Now, it does have decent, solid fundamentals, good positive 1 and 3 year sales growth, a profit margin of 22%, has manageable debt. It's trading at a reasonable PE of just around 17. The company's right around $500 million. We know it. We love it. It's been around forever, and it pays a phenomenal dividend. How much is that dividend? It pays a dividend of 2.39%, which is really solid in this market right now. And that's the forward dividend yield, John HDV. So we highlighted a bunch of strength ETFs, a bunch of uptrending stocks. Last but not least on our list is a little bit more of a value play, IJJ. and it's value in the truest sense of the word. The iShares S&P Mid-Cap 400 Value ETF. These are not mega cap companies. These are smaller companies. You can see it's been kind of a choppy chart of late, but again, if we explode it out, there has been big money buying earlier last year, and it is a solid value ETF to help sort of barbell a portfolio. Now, what kind of stocks does it hold in there? Holds a bunch of great ones. One that I wanted to highlight is KNX, Knight Swift Transportation. It's a trucking company. Look at these solid fundamentals at 75, weak technicals 26. It's been sold hard. This has been a historic big money stock, choppy as of late, but look at the trend over the longer term. This thing is also has solid fundamentals. 1 and 3 year sales growth positive. We have 3-year earnings growth of 32%, a 12% profit margin with a reasonable amount of debt at 30%. It is a smaller company, $7.5 billion. Like I told you, the mid cap. This represents potential value because look at all these technical weakness. It's down 25% year to date. It's down 16.6% in the last month. This is an interesting stock. So there you have it, the 5 best ETFs to buy for April of 2022. If you liked what you saw today, please let us know. Give us thumbs up, leave a comment below. And also, if you don't, let us know what we're doing wrong so we can fix it. Please subscribe if you want to be kept up to date on these newest release videos. And remember, don't follow the news, follow the big money. Check out MAPsignals.com, and I will see you next time. Thanks very much. Bye.